The buy-to-let market is in crisis. Landlords have been hit by higher interest rates, higher taxes and more legislation. Yet at the same time, there's been a surge in demand as more people enter the market trying to rent a property. The chief executive of Foxtons declared it the worst imbalance of supply and demand in living memory. Just a couple of months ago, they said they had 97,000 registered tenants for 2,000 available properties. The result has been a predictable surge in rent. The average rent is now over £1,350, and in some cities like London, significantly higher. But how did it get so bad for both landlords and tenants at the same time? And how long will this crisis continue? Is there any light at the end of the tunnel? Well, first of all, why is demand rising so much? Demand for renting is rising at an unprecedented level. Zoopla report a 51% growth in demand for renting compared to the 5-year average. This is partly due to a surge in net migration levels. In 2022, over 600,000 net migrants came to the UK, and these generally are looking to rent property, not buy. A large part of this is an increase in foreign students, Ukrainian refugees and non-EU workers attracted by skills shortages in the UK and many job vacancies. Renters are now more common than people with mortgages. Also, the surge in interest rates, combined with house prices starting to fall and prospects of more falls to come, have encouraged many potential buyers to stay in the rented sector and think, well, maybe it'll be cheaper in 2 years' time. And if I was renting, it would definitely be a temptation to wait at the moment, although a difficult balancing act because renting is so expensive itself. Anyway, the fact that some are hoping for price falls does mean that the rented sector has been increased by those waiting to buy. Also, this increase in interest rates explains why it's now more expensive to own a home to buy a house with a mortgage than it is to rent. Because despite higher rents, Zoopla report that it's cheaper to rent than buy for the first time since 2010. So young people looking to buy are really between a rock and a hard place. But whilst demand continues to rise, there'll be no let-up in the renting costs. Between 2002 and 2015, the number of privately rented accommodation doubled. Helped with very low interest rates, buy-to-let mortgages became very popular, and this led to a big increase in the supply of private rented accommodation, which was important because demand was rising quite a lot. But since 2016, this growth in the supply of rented accommodation has really fallen away. In 2021, there were 5.5 million homes in the private rented sector, only a very marginal increase on 2016. When there was 5.4 million. And another really important factor in the long-term equation of a private rented sector is a very significant decline in social housing in the past couple of decades. The UK has lost a net around 1.4 million social housing sold off under right to buy and not replaced. And this has meant that many low-income households have been pushed into the more expensive private rented sector. And this is particularly a problem given the decline in the number of low-cost rents available. Now, many people will be asking, is how long will this rental crisis continue? A lot will depend on future wage growth. Just last month, nominal wage growth of around 8%, a near record for the recent years, will be a key factor in pushing up rents. But on the other hand, there will be some slowdown in demand because of the slowing economy. Unemployment started to rise recently, and forecasts for the economy in 2024 are pretty weak, and if employment growth falls, so will demand for renting. However, even a weaker economy in 2024 will do little to alter the underlying imbalance of supply and demand in the private rented sector. Hamptons forecasts a 25% rise in rents over the next 4 years, more than 4 times that of house prices. Now, another paradox is that given the rise in rents, given that people are paying so much for private rented accommodation, why then are landlords selling? Savills report that 25,000 landlords sold in the months of April and May alone, and a net total of 330,000 have sold since 2016. Well, there are several reasons for why landlords are selling up and getting out. Interest rate costs have soared for landlords, especially those with interest-only mortgages. For example, a few years ago you could get a mortgage rate for 2%. Now that's over 5%. So landlords with a £200,000 mortgage with an interest-only mortgage will see a 150% rise in their monthly mortgage costs. And that's a rise that cannot be compensated by increasing rents. Because it's something of a myth that landlords are able to pass interest rate costs on to tenants. They may like to do that, but in reality, there's a limit to how much you can increase rents. So in this era of high interest rates, profitability has fallen significantly, leading to a decline in new buy-to-let mortgages. Secondly, the tax advantages of buy-to-let have been steadily removed in recent years. Tax relief has been removed, capital gains has increased, and on top of these tax rises, there's been more legislation trying to provide a better deal for renters, which is good for renters, but landlords complain that things like Section 21 make being a landlord less attractive. And not only that, but there are new environmental legislation which could be quite expensive for landlords with old-fashioned properties which are very energy inefficient. Fourthly, the biggest advantage of buy-to-let in recent years has been capital gains. Between 2009 and 2022, house prices have risen 85%, and that's at a time of very poor returns from saving money in a bank. So it's no wonder that landlords sought to use leverage to buy as many houses as they could. But this gravy train of rising house prices is over. In 2022, house price to income ratios peaked at 9, and with higher interest rates, this is going into reverse. House prices have already fallen 5-6% and could fall more in the coming years. So for a landlord wishing to get out of a market, now is a good time. Cash in while house prices are still high and avoid the interest rate costs. And also another thing about rising interest rates is that if you can get an interest rate of 4% on a government bond, why go to the hassle of being a landlord to get a similar yield when you can get a bond with much less hassle and stress? And it doesn't help whether fairly or unfairly, landlords have something of a bad reputation, and it's not attractive for young people to enter the landlord market. And many of the landlords are increasingly old and getting to that point where they are looking to sell up. So of all these factors, it's hardly surprising that landlord confidence has fallen to the lowest level in years. Now, what about the prospect of buy-to-let in the coming years? Well, the Bank of England says there's more economic pain still to come. They forecast that the number of buy-to-let mortgages with an interest coverage ratio of less than 125% will rise from 3% at the end of 2022 to 40% of buy-to-let mortgages by the end of 2025. Basically, this means that in a couple of years, almost 40% of landlords will get very poor profitability if they can make a profit at all. And recent data on wages and inflation is not particularly encouraging for those hoping for interest rates to come down, with some members of the MPC saying that interest rates could even have to go up even more. Now, given all this bad news for landlords, a good question to ask is, why are not more selling? Why are still some buying? And is it true that the amateur buy-to-let investor is being replaced by commercial cash buyers? Well, hard data is not particularly easy to find on this, but there definitely is a switch of buy-to-let coming through limited companies rather than personal landlords, and something alluded to by the Bank of England in a recent report. One forecast is for the UK private rented sector to resemble more closely the US in the coming years, which is dominated by large commercial private equity companies rather than the private landlord, which has dominated in the UK in the past. Whether that will be a good thing for renters or not is an unknown question. A brighter spot for the private rented sector is build to rent. 250,000 have been built in recent years, offering new sources of rented accommodation, a new way into the market. But out of a market of over 5 million, it's still a fairly small percentage. And given the recent turmoil in the housing market with buyers kind of declining, this has led to many builders delaying starting new projects, but not sure that they can sell them. And it's ironic that just at a time when we need more supply, the adverse market conditions is causing builders to cut back just at the wrong time. Now, would a big fall in house prices help or hurt the private rented sector? Well, there are many young and middle-aged people who probably would be hoping for house prices to fall quite significantly. And if prices were to fall 20%, combined with rising nominal wages, it would really help to regain the affordability of the market, and it would enable some to move from the rented sector to buy their own home. However, that would be quite a long process. There's going to be no quick crash in prices, but affordability could improve over the next 2 or 3 years. But unfortunately, many of the things that are causing house prices to fall, like higher interest rates, are also negatively impacting on renters as well. So on its own, falling house prices will do little to improve the affordability of the rented sector, which is driven primarily by demand and supply for rented properties. What does the government need to do about this situation? Well, the crisis in the private rented sector has been building for many years, but it's never been a political priority. In fact, much of government policies has favoured home buyers. The right to buy saw councils selling off social housing, which wasn't replaced. And when house prices became very expensive, the government introduced Help to Buy, which is just a way to give people a bigger mortgage and doesn't address the problem, in fact, inflates it. So the government's really been using sticking plaster politics to try to deal with this situation. And given that the current crisis is leading to a fall in private sector building, then the real solution is for the government to become more involved in building houses, which will increase the capital stock and increase the affordability of housing in the private rented sector. And the problem with the housing market is that if you leave it to the free market, there's often market failure. And in fact, we don't really have a free market in housing because of all the government regulation on building houses and planning regulations makes it hard to build houses in attractive areas, even if the private sector would like to. And there's a high cost to a broken housing market. We spend around £20 billion a year in housing benefit. Homeowners facing large swings in interest rates threaten to cause economic and personal hardship. So there's no quick fix to the private rented sector, but the outlook is pretty grim in the next few years. And it really needs to be catered for by more supply, particularly for the private and social rented sector. If you're thinking of buying a house in the next year, then take a look at this video on the pros and cons of buying a house in 2023. It goes into more detail about the prospects of house prices in the next 12 months. Thanks a lot, bye.